I'm tempted to say, imagine away or reimagine away. I mean, give us some sense of imagination as to where global financing can go, because a lot seems to be about a little twist here, a little turn there, maybe we need more partnerships. Is there a bigger picture, Raheem?
Yes, for sure. And I think the speech that we just heard, the fireside chat that we just heard from Amos was right on the money. We have more than enough capital that is sitting on the sidelines to make this all happen. There are trillions of dollars that are waiting to be mobilized. What we need are continued signals that this is a direction that we're going in, and it's not going to change. And Amos talked about some of the demand signals that government can send, and some of them are like IRA, and some of them are like providing offtake agreements. But the more signals we get, the more surety we have to be able to mobilize that capital. Today, as we sit here right now, Amos is right. We don't have all the answers. We know we have all of the minerals that we need in the ground to make this transition work. That we know is a geological fact. We just need to get them out quickly enough. And as capital looks at the price signals in the market today are challenging. They're going in the wrong direction. And so investors are worried about putting their capital to work, and they want to know that those demand signals are going to be real. And so as long as we keep providing those demand signals, and forums like this are the ones that are getting us there, we will be able to mobilize that capital.
There is some shifting in terms of who the investors are today, isn't there? When we're talking about critical minerals, who is vested in critical minerals, and not surprisingly, you look at EV manufacturers and the like.
Sure, yeah, absolutely. Once upon a time, we had a small set of specialist funds that financed all of the mining projects in the world. With critical minerals, there is a new set of investors, and it's not just one. We have multiple buckets of new investors. So we did a deal about a year ago where General Motors came in and for the first time since Henry Ford, put $650 million of equity to go build a mine in Nevada. It's a car company building a mine in Nevada, and they're not the only ones. You've got chemicals companies.
You were instrumental in that, in fact.
Yeah, that was...
I will give you that.
A little bit of self-promotion, I appreciate that, yeah. No, BMO led that transaction, but we have multiple new buckets of capital, and it's car companies, it's OEMs, it's chemicals companies, it's everyone that's out there that is committing to an energy transition as a result of those demand signals that Amos talked about. Right, as a result of demand signals like this one, where the Kingdom of Saudi Arabia has put all of this money into having a forum like this one, where we can get together and say, this is the direction we're going in, and come hell or high water, that's where we're going to get to.
Jeff, that's a pretty positive 3 minutes on reimagining some of the global finance. What is your perspective, though? Do you see it as positively as that, or are we still hampered by the perceptions of mining traditionally as we move towards this exciting transition?
I wouldn't say traditionally. You're hampered by a whole new set of restrictions right now. In fact, I'm not going to take the view that we're sideline capital's ready to come here. What we're experiencing, I would argue, is one of the biggest misallocations of capital the world's ever seen. Look at the Magnificent Seven. Do I need to point any further than that? So I agree, you've got a massive amount of money sitting in money market funds. Now the question is, let's just use oil as an example, it's a 20% return on capital employed opportunity, but it's the worst performing sector in the S&P right now. It's telling you the capital is not getting where the return is. Instead, it's chasing tech. For one, don't have to worry about it being clean. In fact, I like to point out, investors, they don't like brown, they don't like green, they don't care what color it is, they simply don't like it right now. Whether
are they allowed to still think that way? I mean,
yes,
sorry,
they can think that
naive,
way.
Maybe.
By the way, that's a point I made. In fact, looking at some of the headlines, I got in trouble for saying it recently, was that investors are going to turn green when inflation comes back down. Because the reason why there was litigation risk with ESG, what are you going to be viewed about if you go into brown? And then there's so many shades of energy transition, I can't keep track of all the colors, but the investors don't care. And so you concentrate your capital into these sectors that are safe, which happen to be the Magnificent Seven. But the returns in some of these other sectors, whether if it's in critical minerals, oil, and the rest of them, they're substantial, where you should see the capital starting to flow. So get to your question about reimagine it. Let's go. What is the root problem? How did we end up in this mess? We took a market failure and turned it into a government failure. Government should have levied a carbon price or a carbon tax going back in '09, and that failure started when Obama failed to pass it back in '09. So you turned a market failure into a government failure, and then when the market started responding around 2017 with ESG to deal with the government failure. So you compounded a market failure where now we can't allocate capital. So Raheem talks about, okay, you get the demand signals to move the capital to the right place. You can't get the demand signals anymore. We've hampered. I go back and go, do you have the traditional constraints on this? No, these are a brand new set. So the thing has compounded itself. So you're going to have to go around, circumvent this, and come up with different mechanisms to be able to get the capital to flow to the right places.
Rita Jo, do you buy that?
Let me tell you, what I buy is the fact that it is going to take all of us in order to get this done. This is not going to be, whether it's just government or private sector, it's going to be public-private partnerships, it's going to be even philanthropists and nonprofit organizations. Everyone has a stake in this. But I think that what I want to put out is the fact that there is a role for government, and that's why we're here. We're here at the FMF in one of the largest conversations in this industry taking place right now, being led by a host of government officials that have come here today and this week for the different types of ministerials to discuss critical minerals. When I, leading an organization like the Export-Import Bank of the United States, a couple of years ago, were we still talking, were we in the conversations around critical minerals? Yes, we were. 2 years later, right now, it is at the top, at the top of the list. Why is it at the top of the list? Because of all the conversations that everyone is having up here and has been having in this session for the last couple of days. When you take an organization like Ex-Im Bank, who is, I would say, reimagining ourselves after a little vacation that we had, the thing that is so exciting right now is the fact that our ability to crowd in private capital is what's exciting, because our charge is not to supplant any. But when you look at an organization like Ex-Im, who is there to help the U.S. company and the foreign buyers who want to purchase U.S. goods, and I always say goods and services, that's where it's going to be critical. The thing that we have done, and even reimagining the work we've done, last year we signed over 20 co-financing agreements. Why did we do that? We signed 7 memorandums of understanding, and I'm literally just coming from signing one with Saudi Ex-Im. We're excited about the continuation of how organizations working together can spread the risk, can go out and look at projects, because these are projects that have to be brought to scale. These are projects that are maybe in risky locations. These are projects that have the ability that's going to need an inordinate amount of capital. So is the private sector there? Absolutely. We're not trying to supplant that. What we want to do is to be able to work with them in the debt financing that we have to offer, everything from direct loans, our working capital guarantees, to our insurance products. And I think organizations and companies who can work with us, who have worked with us in the past, to see that we have the ability now to co-finance with other export credit agencies, it's going to, I believe, will make us more attractive for them to come to look at the financing tools that we have to be able to deploy to projects of this type in this particular sector.
Would you acknowledge Jeff's point about investors and ESG? They don't care about what color, frankly, the investment looks like. It's the return that they're really looking at. When you have critical minerals at the top of your priority list, that comes with a tag automatically.
We have to automatically care about ESGs. And I'm not going to say that people don't care. What the conversations we have been in, people do care. It's just depending on where you are and who you're talking to. One of the things, especially with the ECAs that we work with, everyone in the G7, our friends and allies in the G20, the Quad, you name it, just across the board, everyone who is also a part of the OECD arrangement that we all, as like-minded countries, live under in the work that we do, the ESPGs is something we all care about, and we want to make sure that in communities, because communities care, that's who cares, is communities. And then when these communities care, they want to see us all be more accountable. They want us to see us be all more transparent in the work that we're doing in their backyard.
All right, I'm going to point out, I didn't say
You're
they
allowed
didn't
to,
care.
yeah.
I didn't say they didn't care. They do care. I agree 100%. The problem is that there's so much risk around
It is.
caring.
Yes.
That's the problem.
Right. That makes them so
Makes them
unattractive.
scared to care.
Scared to care. I'll take that. That's not far off not caring anymore, but I take that, Jeff. Thank you. Can I just turn to you, Hamid? Reimagining global finance. I mean, what does that mean to you?
So before we can reimagine, I think we need to have a reality check. And this was the session that we had in the previous one. So we're entering a completely new phase in global growth, growth framework. Going forward, if we look at the next 10-year horizon, I think we won't see the growth that we had, global growth that we had before the pandemic. Global growth has slowed down for 4 reasons. First of all, more fragmentation. Trade used to be a major driver of global growth. Second thing, we're entering a phase of higher for longer. Interest rates would remain high, would not come down to close to zero. That means you would see cost of borrowing would be significantly higher than we had before. That would depress investment, second driver of growth. And the third is that, Magnificent Seven, AI innovations, a lot of capital would go into those, very quick, high return investments. So where the mining and minerals, they are slow processing, long gestation period, would be competing for resources, capital, with the sectors that have very quick returns. So what we would see, the financing gaps would not only persist that we have right now, it might grow even bigger. So we have ambition for trillions of dollars. Demand signal Rahim talked about. Signal is very fickle. We get sometimes signals that are very strong, other times we don't even hear any signals. So overall, the demand side would not really match the supply. There's capital, there's huge amount of capital there, but it won't, I would agree with Jeff that there'll be a misallocation of capital, and that's part of the market failure that we would see. And if we're to reimagine global finance, we have to really think about how do we solve the market allocation problem, this market failure problem. And this is where Exim banks and others would need to come in, but that would not be enough. We need much, much bigger pot here. We're not talking about a few $1 billion, we're talking about trillions of dollars. Yeah. And that's where we need to reimagine what kind of financing architecture we need to incentivize investments in critical minerals sector. And this is where I think a lot of brains need to work together. For example, right now the financing streams are very fragmented. Approval processes, even in the multilateral banks, is extremely cumbersome. We need the ESG standards, we need many other studies. So we don't have that much time in our hands to get to net zero. So that means we have to reinvent the financial architecture, a super fund for the super region kind of thing that we would need to move forward, to move the needle. Otherwise, it would be coming back next year or the year after, we'll have the same problems.
Well, precisely. I just wonder how you recreate or create a sort of long-termism approach then from the short-termism that you all know far better than me is just that's the way our world works at the moment, and that's not going to change overnight.
And no, I think that's exactly the point, that the market often responds to short-term signals. Your quarterly profit matters more than what happens to the rest of the world. And this is where even capital allocation is based on the quarterly performances or yearly performance. But this is where the public policy, public-private partnership would play a very important role. You have to really create incentives where the investors would have a longer-term positions. There are patient investors, but they're not investing in the mining sector. For example, pension funds and sovereign wealth funds, they're not coming in a way that is meaningful. They often try to do here and there, but we need more of those long-term patient investors coming into the critical mineral sectors. But they're not there yet. So now you have to have a dialogue with them. I don't know how many pension funds are here. Probably none. So if we talk with the pension funds, they're sitting on trillions of dollars, but they're not investing in the critical minerals. So I think this is where the long-term perspectives would come, when you can bring those long-term investors who can take a much longer perspective, as opposed to hedge funds or other funds that are looking for a very short return.
Let me throw Frank into this. Let me throw a pebble into the mine in a way, Frank. There is, as you know, plenty of discussion out there about doing away with the dollar. Let's go to local currency trading. Can you ever see that, and what difference might that make?
Well, Jeff may disagree with me on this, but you can't reimagine the financing of critical minerals unless you understand that it sits on a substrate of a changing global monetary system. De-dollarization is happening. Now, there's lots and lots of conversations about how it's happening. Some are less likely, some are longer term, and some are actually happening as we speak. So that, there's obviously been conversations about a golden dinar and a golden ruble and all these things. And there's been conversations about a BRICS currency, a petro yuan backed by gold. These things could happen longer term, but what's actually happening now in front of our eyes, and no one's paying attention to it, is that the world is turning to bilateral trade agreements using local currencies, and it's happening everywhere. And if you look at North Korea and Indonesia, India, Malaysia, China with Brazil and France, China and Russia, India and Russia, China and India, they're all turning to dirhams, rupees, rubles, yuans, and these trade agreements are happening every day, and it takes away from the use and the value of the US dollar. And again, depending how quickly it happens or how slowly it happens, will have an impact in global power dynamics, and it will have an impact on the relationships between those that produce commodities and those that need them. And this, again, I mean, you could talk about extremes, what would happen if it happened very quickly. You could end up with a major global conflict. But I suspect that everybody is aware of that, and things will happen slowly. But over time, they will happen whether the US likes it or not, because it will change America's power dynamics in the world. It will change the standard of living in America. It will change inflation rates. It will change interest rates. It'll change a lot of things. And America is now starting to become aware of it. And if you notice what's happening with the US media, at first they were poo-pooing it. They were suggesting, this is impossible. They keep referring to that term TINA, there is no alternative. Yeah. And I think that that's just Western arrogance and ignorance. And it just refuses to accept that it's happening, that 80% of the world's population wants it to happen because it's detrimental to the global south, low-income countries, to trade with a US dollar middleman that they don't really need. It's expensive. They have to service their sovereign debt in US dollars. They're buying commodities that are priced in US dollars. The Fed jacked up rates to 5%, and now the UN is begging the Fed to lower rates. I mean, all of these things have an impact on countries around the world. So they want to see a change, and it will happen.
I mean, do you want to?
I just want to respond.
It's happening as a message.
I just want to respond very quickly that trade fragmentation. We have a fragmented trade regime right now, and it's getting more and more sort of fragmented. That's highly inefficient. Almost every economist agree that free trade actually leads to more prior to optimal outcome. Same with the monetary fragmentation. When you have multiple currencies, bilaterally prices are adjusted, that is leading to very inefficient price signals. Like you don't have a global price anymore on many of the goods. Every price is bilaterally determined, and that is leading to more inefficient things. So what we need to reimagine is a global currency. And there were thoughts about global currencies in the past. Keynes talked about SDR. He didn't mention SDR. He had an idea of Bancor as a global currency, which should settle all the international trade would be settled on global currency. That would have solved the problems of the countries servicing their external debt in dollars when dollar value goes up and down, and that affects them. So we have to reimagine. Part of the financial solution architecture that we have to reimagine to solve the global problem is a global currency. And the IMF, International Monetary Fund, has a de facto global unit of account called SDR, special drawing rights. maybe we need to think about that as opposed to having many, many multiple currencies being used to drive global trade. And that would lead to more inefficient outcomes.
Rita Jo, once Frank started talking, and I was waiting to see a few shakes of heads, I saw quite a few nods of heads, actually. So would you concur that it is a process that is en route?
I mean, I would concur that government all of us are watching things very, very closely. And we are combining our resources and we're combining our experience and expertise, especially in areas around critical minerals, as we look at what is really affecting or growing any and all of our economies. You know, at XM, what we have seen that has allowed people to come together in a very bipartisan way is the fact that we all realize we need to speed up. We need to speed up because we're all moving just a little too slow and things are moving past us at lightning speed. How are we able to do that? Well, at XM in 2019, when we were reauthorized, Congress allowed us to have asked us to make more financing available in 4 critical areas. They wanted us to make more financing in sub-Saharan Africa, so we know what that region brings, especially in the critical minerals sector. It asked us to make more financing available around small business, renewables, and then, of course, around transformational exports. But the thing that was so critical was giving us one of the longest reauthorizations that we had ever had in XM's history, an organization that is turning 90 years old. But the most important thing that was important was that it gave us a larger lending cap than we had ever had in previous years. It gave us $135 billion. We have spent about $35 billion, so we have about $100 billion left. When you look at sectors, especially like critical minerals that brought us here this week, we have the ability to not only be able to do very small deals, but also very, very large deals. It also gives us, Congress asked us to modernize and to introduce new tools and also to be out much more aggressive about the ones that we have in order to brand XM's ability to really work alongside the private sector. So being able to take that type of dollar, we don't have the prohibitions that a lot of other organizations might have that look like us. So that's one reason why we can come together to do deals in a very, very large way and also work very closely with the private sector and all of that.
Right, so that sounds a bit like that's a reinvigorating of dollarization in a sense. But, Jeff, Frank started by saying, not sure how Jeff's going to respond to this one, but do you think de-dollarization, the removal of the dollar is coming?
My biggest fear is it starts with the Americans. It doesn't start with the rest of the world. The Americans, domestically, where is Ukraine on their it's like page 10 in the newspaper anymore? The conflict here in the Middle East lasted a very short period of time. They don't have an attention span. That's the core problem. And if they pull that giant Navy home, and in the Navy and that dollar go hand in hand. And because look at what happens with the Red Sea, with the attacks the Houthis had on the U.S. warships. And when we think about the dollar, it's backed by trillions of dollars, bigger than the U.S. economy of treasuries. And good luck trying to replicate that. And it took decades, and it runs a huge current account deficit with stuff coming in and dollars going out. Now, let's say the Chinese want to do this. They're going to have to print so many dollars for the rest of the world. You go back to the 50s, you had the Eurodollar market already taking deposits, doing exactly what Hamid was talking about. So the dollar, that was, it was the Bretton Woods. It was something no other nation had ever done. The British went out and tried to take over the world. I noticed in the reading this, they go, well, the Americans, they owe the rest of the world. You'd rather owe the rest of the world than own the rest of the world. Right. Because good luck, you got to come and get your money back. That's why I say, I don't know. I kind of may agree with Frank, but it's not going to come from the rest of the world getting rid of the dollar. It'll become the Americans going, what are we doing? Funding this and our Navy getting attacked in the Red Sea. Bring it home. And then good luck. And you got to figure out how to replace it. and you got to go out and start policing something like the Red Sea again. And I think, you know, if the U.S. wanted to stay in that role, the way it dealt with the Red Sea over the last couple of weeks with Maris going home, if it's going to be the dominant, because what that dollar is paying for is that Maris ship to sail through the Red Sea. So I disagree with him. The dollar, replicating it would be incredibly expensive, difficult, and I think because it is costly, I think the risk is the Americans in it.
This has taken up a little bit more time than I thought it might. Well, Frank, since you launched it, I'll let you. Do you have a
I have
quick
a response,
riposte? Keep it short.
And again, he's not wrong, but you have. Listen, the world's trying to make a decision here. You've got the U.S. saying to the world, "Use our dollars and we'll protect you," and you have China saying to the world, "Use our yuans and we'll make you prosperous." That's the battle that's taking place. And what I look at is what the competition to the financial system that the rest, China and the BRICS, are creating to compete with the Western financial institutions. The New Development Bank, the BRICS New Development Bank with $100 billion, replicating what the World Bank does. These contingency reserve arrangements between BRICS countries and low-income countries. China with currency swap arrangements with 40 countries around the world, including the Kingdom of Saudi Arabia. These are all designed to create a competitive system to the US dollar. And I'm not saying that the dollar is going to be eliminated, but there will be severe competition that will reduce the demand for US dollars and therefore reduce its value.
Okay.
That's all I'm saying.
Yeah, thank you. Point made, very well made. Raheem, you may, yes, and then I'm going to come back to you on something else.
I might make just one point that ties us back a little bit to where we started on critical minerals.
Yes, thank
which
you.
Which is, you know, where I started was we need consistent, continuous demand signals that show us that we're running down a specific track, even if we don't have everything figured out. As long as those are consistent and continuous, we have enough stability to direct capital to specific projects, which is what we need to do if we need to make 100 new lithium mines and 50 new cobalt mines and 10 new graphite. We need to do all of that. We need to mobilize a lot of capital, and we need consistent, continuous demand signals that show us that we have stability. Now, de-dollarization is one of the things that is one of many risks in a commodity play, right? And in anything, but we also have geopolitical risk, we also have permitting risk, we also have price risk on the underlying commodity. And what we need out of government and out of forums like this one is consistent, continuous signals that we are headed down a specific track, that there is going to be stability, and if you put your money to work in a mining asset, you're going to make money back.
By the way, I was trying to figure out, why are we talking about de-dollarization? Well, because it has nothing to do with this. It's not a signal. It's a currency illusion. I can price a commodity in anything. It doesn't matter what I price it in. The price will always come the same. When I get the question about what if RAM prices in euros, oil in euros, I don't care. Because you still can convert it. I can do it in gold, I can do it in wine, I can do it all of this. That reserve currency is providing your underlying financing. Yeah. And I don't think I've ever seen anybody bring up de-dollarization as a risk as to why they don't invest in critical minerals. Number one reason they do is it pollutes, and there's issues around social issues around labor in places like Africa. Those are the two main reasons people don't invest in this. Right. It has nothing to do with the dollar.
And let me, sorry, it's gone to...
Yeah, no, I just want to find a midpoint here. Like, I think dollarization matters because, when you think about if the local currency is very volatile vis-a-vis dollar, that really gives very mixed price signals because you are producing minerals and whatever you want to export to the international market, and if your local currency is extremely volatile, that affects your export performance, that affects the global supply. So Raheem's point about stability on the price signal is very important because in a market where you can't really have any control over your domestic currency's price, it is completely determined by the Fed policies, then you are really being affected, and you can't really give a statement.
I'd agree with you, but I've never heard an investor ever bring it up once in my 30-year career.
So from the investor's perspective, we're talking about the overall the market challenges that we have here. Yeah.
Okay, look, we're down to
The
four. We're down
volatility in the market due to regulations is far greater.
But can I make a point
We're
back
down to
Reem-
four.
what
We're down to
Reem has
4
said?
minutes. I'll give you 30 seconds.
Reem said people want stability and they want to see strategic partners,
Yeah.
strategic projects. And that is what, when Secretary Blinken introduced the Mineral Security Partnership, of which I have just been excited to be a part of, in all of the iterations of the 14 countries working in a multilateral way to look at strategic projects around critical minerals, I think that's another thing that we're all looking for, because if we're going to deploy capital, we want to make sure that it works. And not only do we want to make sure it works, as you said, the shareholder wants to make a profit.
And bringing us back down to earth a little bit from our reimagining, Raheem, I want to come to you on this point about consistency and stability, certainty.
Yes.
Still, investors look at mining and the sector with either fear or confusion. The complexity of this industry is mind-boggling, isn't it? How do you adjust for that when you look at the sort of figures of investment that are required?
It's difficult. That's why we need these demand signals, and we need price signals that make it worth the investment. People look at mining assets and they understand that they are very, very long-term investments that require a long period of time to get up and running. Once they're up and running, they can be exceptionally profitable. But they want to know that when you get a lithium mine up and running, there's going to be demand for that lithium and the prices are going to be strong.
Is there any way you could offer a security on investment to some extent, at least, in terms of how much of your shirt you could ever possibly lose? I mean,
Look, to the extent that we have continuous policy discussion, right? And the IRA was a shot fired across the bow. But it's not the last thing we're going to do. It's the first thing. We've got version 1, and many other countries. You heard Amos say it. Many other countries need to do exactly the same thing, and we need multiple incentives, and we need continuous incentives. And the more we can de-risk for investors the chance that they start investing in a mining project, and then permits go away, or there's geopolitical instability, or the price collapses, the more investment we'll be able to mobilize. That's very simple finance 101, but we do have many, many billions of dollars that is sitting on the sidelines that can be mobilized, that has been mobilized, and we showed it with the transaction that we did with General Motors and Lithium Americas just a year ago. And there are new pockets of capital. We just need to make it possible for those pockets of capital to look at an investment and understand that the risks are boxed and that they can confidently enter into investments and make returns.
find that way, imaginative ways. We have a minute, Frank.
Yeah, well, just to answer Jeff's main point about why there's a lack of investment in the sector, I think that the mining industry has a PR problem, it has an image problem. And I said this yesterday at the ministerial conference, that the problem with mining and the reason it has such a terrible image is not because of the way industrial miners conduct themselves. It's because mostly of small, illegal, and informal miners in places where I've done a lot of business, Latin America and Africa, who misuse cyanide and mercury, don't know how to handle and dispose of their waste, and ruin the environment. And we're developing ways, and specifically, I'm working in Colombia, where we're creating a system where we're formalizing the small miners into the formal system, training them, giving them the technology, cutting them into in terms of sharing the profits, working with the university to train them in everything from accounting to legal to technical, formalize the small miners, take them away from the criminal bands, and you're going to solve a lot of the image problem that this mining industry has.
There is a challenge.
Bingo. That is the core right
There is a challenge and a half. Very well put, and bang on cue as well. Really feisty panel too, and thank you very much for that. Very wide range of views. Ladies and gentlemen, our panel, thank you very much indeed. Thank you.